Yeah, so much in trading is really about understanding the tools that determine where price is right now and determine where other people are in the market. At the end of the day, we talk about these markets as if they're just things. It's really what moves markets is people. People participating in the markets, trading shares, trading contracts, trading lots, moves these markets. Volume's different in every asset, though. Volume measures the number of shares, contracts, or ticks that have traded within a given time, and it's a great tool for investors and day traders alike, as it's connected, generally speaking, to a specific time frame. So as a 1-minute candle prints, below it, oftentimes you'll see a separate candle that is representative of how many contracts, shares, or ticks have traded within that given time. Now, it's unclear where volume really comes from, but it was certainly made popular by this incredible guy in the beautiful fedora, a gentleman by name of John McGee. He had this book called Technical Analysis of Stock Trends that came out forever and a year ago, back in, I believe it was in 1948, that really helped to make a lot of these technical things a little bit more popular. In terms of calculations, of course, it's different. It really depends on the asset. Trading volume, trading value is often measured in time connected to an individual candle. Like I said earlier, a 1-minute candle, for example, will print green or red, showing more contracts, shares, or ticks that were being moved in either direction during that time period. But this means that volume is used differently for different traders. Futures traders like myself, for example, can look at a large buy volume candle and assume that there's strength in the buyers. Here, buyers are being represented and getting involved because volume represents the amount of contracts that actually traded within a given time period. Forex traders don't necessarily have that luxury because of how volume works in CFDs. In futures contracts, all volume is centralized. Everything has to go through Chicago. I don't care if you're Goldman Sachs or if you're my dog Charlie. If you put a futures contract into a market, that has to be shown. I have to be able to see it. CFDs are a little bit more complicated. They're not centralized in that same way, so you cannot see volume in that same way. So Forex traders are looking at the movement of ticks in a given market as opposed to the actual amount of lots that have been traded. I don't know if there are any tools that show lots traded, but I doubt that they'd be able to go across all CFDs, right? Different brokers.
Yeah.
Just a couple of tips and tricks, and then we're going to get into some visualization, some exercises. When you're day trading, you have to use volume as a way to confirm direction. That's how Jordan and I most often talk about things, because when a market is moving up or down, it has to be supported by something. Think of it as steps. If you have a staircase that is going up to your second floor, if it's connected to a wall or post below or has a metal frame, you can feel confident. If you take a step onto that first tread, that first horizontal plane, and you feel it's a little shaky, you look under and it's not connected to anything, it's not likely you'll be able to make it to the top of the second floor. To that end, when looking at big spikes on extended moves, oftentimes this means that a market is exhausted. A market going up and having negative volume often means that we're going to see a reversal and vice versa. Lastly, please don't get caught up in tools that are derived from volume. You'll often trip over dollars to pick up pennies in this way. Volume is a very clear tool. It's a very clean way to look at what's been traded within a given time. There are a ton of different ways to visualize volume. You can talk about all kinds of volume weighted averages and all kinds of oscillators. But at the end of the day, volume is volume is volume. So let's take a second and let's begin to visualize. So what I'm going to do, guys, is I'm going to bring up a couple of charts and use this as an opportunity, an exercise to see what happened in a given market when looking at certain candles and looking at certain kinds of volume. Why am I doing this? Well, when I talk about these things, it could mean something to you guys, but oftentimes you got to see it, right? In order for it to make sense. So let's bring this guy up here. This is just a really simple chart taking a look at the S&P, the ES futures contract. When you're looking at this chart, you'll see here that there is a negative bar here towards the end of this push downwards. Now, this is looking a few months ago. We're in the middle of March here. Obviously, we're trading up here now. Obviously, we're seeing a high here, but it's hard to remember what happened back in March, right? So if you had to guess, Jordan, looking at this market, what did the next day print? Just taking a look at volume and taking a look at how the candles have moved.
Well, with large volume spike in candles, according to your analysis there, could signal the end of a move. So I would lean towards
it. Could. You're going to lean towards the upside, and you, my friend, would be right. The next day, there is an engulfing candle that moves to the upside. Now, you do see a sliver of prey of the volume, which sucks because it gives you the next one, which was another red day. But as you can see, even though there's an incredible amount of negative volume here, you're starting to see this thing begin to catch a bid. So as we continually move, we see this market begin to slowly but surely push towards the upside. Now, here is another example. We're getting at the point of control here. This is a previous area of consolidation, so it could be a previous area of resistance. We're seeing the first amount of red trading volume print, but it is a small amount of red trading volume. Based off of what you know about volume, Jordan, what do you think the next day prints as?
I'm going to look at how I use volume here, which is good because this is going to show different ways to use it. I'm going to look at, as we've continued bullish in price, you can see that volume's actually dropped off. So the interest has lost a little bit. So coming up to this, I would still look to potentially fade it.
Beautiful. That's the answer that I'm looking for. Guys in the chat, do you guys agree with Jordan? If you agree, if you're trying to fade this thing, what in the chat? If you're trying to buy this thing, thinking about a breakout, 2 in the chat. Just super quick. I'll get a couple of answers and then I'll move on. Please remember that different styles of trading allow for you to look at volume slightly differently and get into different positions based off of what you're good at. I myself am much more of a pullback trader. So my entries would be somewhere down here. I would be much more interested in buying this thing down here, which is technically a fade, but in this market, after seeing us catch a bid, we have higher lows here. We have another higher low. When you're looking at this whole market, it would probably be a better trade for me to buy here. Here, where there's a possibility of this thing breaking out, I don't know if I would be able to fade. I'm just not good at recognizing it. When you look at the next few candles, we break above this thing, but inevitably we continue, right? Now it becomes a little bit weaker. We start to see a little bit of a fall off. You have to remember that there's always news attached to this. So when you're back testing like this, it's always hard to just depend on technicals. But at the end of the day, if Jordan began to fade here, if I know Jordan, if I know him well, he wouldn't be looking at just getting down here and then taking this thing off. Chances are you'd be looking to get a little deeper. Am I right, Jordan?
Yeah.
So that being said, it's a very difficult fade, and chances are he probably would have been stopped out. If I took that fade, I know I would have been stopped out. Diego, welcome in, my friend. If you have any questions, please go ahead and throw them in here. We're talking about trading volume and how to use it on the day-to-day. Now, this is just talking about what happens on the daily. So this is talking about swing positions, but you can apply this to any market. You can apply this to any volume-based asset, which every asset out there that you can trade has volume in some way, shape, or form. You just have to treat it a little bit differently. Let's take a look at something that's a little bit more common for a lot of you guys. Taking a look at something like a Forex pair, for example, the pound dollar. The pound dollar, I've said it once, I'll say it again. The pound dollar is a disgusting pair right now. There's a lot of stuff going on with the Bank of England and the 18 prime ministers that the country has had. It's one of the reasons why Jordan considers himself more of an Aussie than a Brit. It's just it's difficult, it's messy, it's not nearly as pretty as it is in London as it is in Melbourne. Cola says it sounds like CME volumes also reflects institutional buying. but better used as a confluence in Forex, in futures, and not in Forex. That sum things up accurately. Pretty much. Yeah. So that's a great question. And I'm actually going to get into that in some more detail here, Cola. So that's a beautiful way to think about things. Like we said before, in futures, everything has to be public. I have to know what institutions are playing games. I have to know who's involved. Not who's involved. I have to know how much money they're putting in places. You can be anonymous. That's fine. But your trades have to be reported to the Chicago Mercantile Exchange, the CME. When you're looking at Forex, for example, this is a CFD that is traded through FXCM. I have no idea what that stands for, but that's
a CFD.
That's it. Well, yeah, but that's the broker, right? No idea what that stands for. It doesn't really matter. When you're looking at this thing, you're looking at tick movement. You can't really consider each candle down here in volume to be more important than any other candle in volume, because it depends on so much that's happened in a given day. Where it's useful is where you start to look at a cluster of these volume nodes. Jordan actually gave me a little bit of criticism a few days ago when I talked about volume on some Forex pairs. So I had to go home. I had to do some research. I had to stick my nose in a couple books to further understand this. But the core of it is, when you start to see volume clusters like this that are a little bit more aggressive, you can trust this from a volume perspective, but you cannot trust individual spikes in volume to either direction. Diego's asking here, how do you manage fundamentals in trading, or what could a reasonable time be to start searching chart patterns? Thanks, Diego. I want to get...
Let's continue on volume. Diego, we'll address that question in about 10 minutes when we jump into the trading floor.
Boom, there we go. But you have to remember, when you're looking at volume for this perspective, that it's a lot less clear. So let's do this, right? We're going to take a look back. We're going to take a look way back at some of the markets down here. Now, obviously, we know that this market eventually bids up, but we also know that the same style of analysis is helpful, but it's not always right. You have this candle here that prints with a ton of negative volume, just like we looked at in the ES, and that delineated the end of an extended move. But you have to remember, just because that happens once doesn't mean it's going to happen again. This is also an extended move that has very little volume, and then we begin to sell off. So you have to always be careful when you're looking at volume, because there's so many things that play a role in Forex markets as opposed to futures markets, as opposed to equities markets. That, ladies and gentlemen, is a quick breakdown of trading volume and a little bit of an exercise. Thank you for coming to the trading floor.
The trading lab, but yeah.
Trading lab. Oh, wait, we're going to the trading floor. Right.